guys, I am coming before you today to talk about profit margin assessments in your meetings and event management business. This is a huge topic because as profit margins are important in any business, and you need to be making money in order for you to be sustainable in a business, profit margin assessment is very different in the meeting and event planning and management space than in other professional service industry businesses that we work with. And it's because typically you guys are putting out a lot of money initially, right? So you're putting a lot of what we call COGS, which is cost of goods sold or cost of services sold. And it's important to be able to give great estimates of what that could look like upfront, so you'll know what your deposits should look like. And so you don't finish off an event either under because you didn't properly price it, or your cash flow isn't too tight within the management and the planning space of the business to a point where you struggle. Because oftentimes the reality is when you guys are working and these large businesses planning and managing I'm speaking of your clients when I say this. When you're working with your client to help plan and manage their event, oftentimes these large corporate companies you're working with will put down a deposit, but then they may take 30 to 60 days after the event is over to pay you. Yeah, your contract might say they pay within 15 to 30, but you know how it can be when you're dealing with an accounts payable department of large corporations. So I want to teach you how to be able to price yourself at a point where you're not at a cash flow deficit and you have good cash flow insight should your AR lag a little beyond 30 days or your cash flow get a little tight while managing a project. So let's hop in. So first of all, I'm so excited that you meetings and event planning industry business owners are joining me today because I love working with your industry. As you guys know, many of you probably have followed me on social media for a couple years now, and you know how much I talk about working in this space. And I just told you why I enjoy working with you. And it really is very gratifying because I'm able to help these clients specifically in your industry to 3x, 5x their revenue points just by looking at their numbers and seeing where they are in assessments. So at the end of this, we're going to talk more about how you can sit down with me for free to get that assessment. But right now, I want to jump straight in to give you the insights on how to assess your profit margins on every single contract and why it is crucial for your business and a fractional CFO's role in helping guide you to achieve that greater profitability and long-term sustainability. And we'll have plenty of time for you to drop questions along the way. And if you're listening on the podcast, you know, you can always email your questions in. That information is in the show notes. But let's talk. Let's go in and let's talk further about this. So if you're struggling to have clear visibility into where you're making your money and where you might be losing money on your management of events, it's not your fault, right? The truth is there are common pitfalls such as underestimating your costs, not allocating the overhead properly, and or ignoring small but frequent expenses. And when this happens, the last time, I don't understand how people had this happen. And the last time someone told me about it, they had no one to go to for support because that's not something that their bookkeeper does, and it's not something their tax person does. They don't help them to know how to address these common pitfalls. So I want to let you know that you don't have to be alone. I got you. You can do this. You just need someone that understands your industry and to break this down in a way that works for you, because you already got enough things you're juggling. You don't need yet another task. And I know for many of you, you're like, definitely won't need numbers management on our plate. And I get it. And so today is for meetings and event management professionals just like you, albeit you are the business owner of this industry, and you have a business in this industry, I should say, and you need to know how to more efficiently assess your profit margins, or you're a leader in a corporate company, but you're in this position and you're trying to bid better on the company you work for's contracts. So this is for the both of you. And assessing profit margins on every single contract is key to making informed decisions on pricing, where to cut costs, and where to invest more in a business to give it a bigger ROI so your profit margins are higher and your people you're leading to these events will come and be willing to pay more, right? So ultimately, it ensures that every single event you manage positively impacts your bottom line. So if you've been concerned that you just can't be successful at accurately determining your profit margins because it's just been such a struggle, I want to put those fears to rest, because you can. You just need the right person to give you a step-by-step guide to be able to do it. And I want you to know that many a times you may rely on your accounting team, or like your bookkeeper, your tax preparer, or even your CPA to help you with that. And they want you to believe that all you have to do is look at your P&L and your balance sheet and track your numbers, know what your income is and your expenses, and look at that bottom line. Is it black or red? Well, I'm here to tell you it's far beyond that. It's actually, that piece is only the foundational component of managing your business finances. As you know, being a business owner, there's far more to financial strategic assessments in that part of your business. You actually need a financial strategist to dive deeper into those numbers so you can get a story to understand what they mean and make well-informed financial decisions to be able to maximize your margins with ease and confidence. So if you've ever thought, my bookkeeper nor my tax preparer has ever provided any type of strategic guidance on how to get an ROI throughout the year on every client and every contract that I've worked with, then you're likely right. And that shouldn't be an expectation of them, because that's not their expertise. So they are responsible, specifically bookkeepers and tax preparers are usually responsible just for the transactional components of what already has happened in your business. And they're geniuses at inputting that data accurately. So that means what you've already spent, any retreats or conferences, or let's speak from an actual event. So how many labor contractors you've paid labor costs to. They track all of those things and put them into what we call the financial statement, so you can see them. But there's a large gap between bookkeeping and tax preparation, and that's where fractional CFO strategy lives. It's taking that data that your bookkeeper has put in and extracting and excavating it and making sense of it for you. So when you sit down with me, I can tell you in 10 minutes flat exactly what's going on in your business financially. We can talk about how it aligns with your personal goals and your operations and your structure of your business. And then we can make forecasts to pivot or even further accelerate where your margins are. So our job is just that. As a fractional CFO, we are forward thinking in your business. So we create the tailor-made strategy that goes along with helping you to accelerate. And as we're the CFO, I like to say we're a CFO you got in your back pocket, right? So we're there to give you ongoing support as you need it, bounce things off of us as you need it. We've had clients sit in a meeting with their banker, and the banker is presenting to them options for maybe a line of credit or a loan, and they have taken pictures of that information and sent it directly over to us. And it's like, what do you think? While they're sitting there in real time and giving them the guidance that they need, so they feel like they have that extra layer of support. That's an unbiased person that's not trying to sell them something because we'll get better incentives if we sell you this loan or anything like that. That's what fractional CFO services are. And I would say in a nutshell, but it's so vast. People often think we're just in the finances of your business. And while that is the beginning and it starts there, as you listen along, you'll understand why it's far more layers than that. But at the end of the day, we want you to have the detailed financial analysis to help you achieve the personal and business goals that you have for your business and your role. And as a matter of fact, our firm, Commerce with Kellé, we're a one-stop shop firm. So we do bookkeeping, full service accounting, invoicing your clients, paying your contractors, issuing your 1099s, filing your 1099s, and the financial strategy for you as the business owner, even going all the way to tax preparation, all for one monthly flat fee. You heard that right. One monthly flat fee. Oftentimes, that's the piece that people miss, because everything I just named, typically business owners are paying for those services individually, and it costs them far more than our comprehensive flat fee. And or in addition to, they may have one or two pieces in their package, they're billed hourly on other things. And we do our best to get away from hourly altogether, because we want you to be comfortable and confident that you can get to us without getting a bill from us that you were not expecting. You heard that right. We're completely ready to take you from being in the weeds of the business and not quite understanding the margins. You're just planning the next event, to focusing on driving up revenue while we provide you with the strategy. That's, of course, you can change how you want. It's a baseline, but it's definitely a starting point of something you never heard before, you never had. And you will see at the end of this a testimony from one of our current clients, or you'll hear a testimony from one of our current clients that's been with us for a few years now, who's had her business for 16 years in your industry, in the meetings and the events planning space, and how even after 16 years, she has so much more guidance and confidence in her business now than she had before because of fractional CFO service. So let me expound a bit. I've just been kind of talking. I don't know. Some of you are probably new to me, some may not. So I want to share a little bit more about my background so you can understand why I'm so non-judgmental. I'm passionate. I am the direct CFO that you need to have your business be successful. And I'm not just a boring accountant that sits behind Excel spreadsheets. So you see, I didn't learn about money management until I jacked up my own money. I was not born into money. I didn't inherit any money in my family. That just wasn't how I was raised and what my family culture was. So we didn't talk about financial management for me growing up. So I did what many people do, and I jacked up my own money and my credit in my early 20s, and later needed to repair those things. But as I began to repair them, I realized this is actually pretty cool. I like figuring out like the strategy behind fixing it and what to do to not make the mistake again. So I was in a cotillion when I was 16 years old, and in my cotillion bio and program, which is hilarious, the page You can see this old picture of me with the weird head tilt. I don't know why we did this in the 90s, but it looks awful, as most pictures did, or does now anyway. But at the end of my bio, it said, and when Kellé grows up, she wants to be an accountant. So I knew from that age of 16 that I wanted to be an accountant. And I think now it's all I've ever done in my career. Let me make that clear. But I think the reason I liked it so much initially, even before I even probably clearly knew what it entailed, is because one thing for sure I knew is it would be black and white as far as the numbers go, but it will also leave room for me to have input and strategize. So that's why I love accounting. And while I was always good with numbers, I didn't really like math. And a lot of people, when I tell them that, they're surprised because they assume that everyone in accounting loves math. No, and I still don't like math. I love, again, the fact that numbers are black and white. There's no ambiguity on the results, but there's room to strategize. That's my passion for this area. And so, although I had that plan established at the tender age of 16, I had my first child at 19 years old. But I didn't let that stop me. I worked my way up through college. Through college and started my career as an accounting clerk and worked my way through corporate America. So I went to school I went to school part-time studying accounting and business financial management. And I worked in law firms for most of my career where the billable hour was very real. But I worked in the accounting space, so I got to see, like, how are they billing these hours? What is their hourly rate? And it would be crazy, crazy, crazy. And so I myself worked ridiculous hours of overtime, sometimes in the office to almost 3 a.m. because I literally was doing my job and other people's career. But doing that, I created a career for myself, working my way up the corporate ladder, and I soared from an accounting clerk to an accounting manager before I even finished my bachelor's degree, which is unheard of in such a specialized, skilled position and role. But it was because I was not afraid to take on new things and learn new things in accounting. But I was really burnt out and boxed in. Once I did decide to leave my dual C-level career at a $27 million lobbying firm to become a full-time business owner during the pandemic, and I had a graduating high school son, and my daughter was actually starting middle school at the time, I knew how to be strategically profitable and productive in my business. And I knew when it was necessary to spend, how to spend it, and how to not burn myself out in my own business doing it. And I've been so honored and blessed to guide several clients to 3xing their revenue in less than 3 months with no longer being able or having to burn themselves out as well. So now I want to talk to you about doing the same things in your businesses. Now let's jump into this presentation, the meat and potatoes of it all, because you can do this. You just need a fractional CFO to give you the step-by-step guide to drive up profits while you never have to wonder what's next as it pertains to your margins again, and with simplicity. And for the last 20 minutes or so, my goal is to show you and tell you that Commerce with Kellé has a fractional CFO who knows maximizing your profit margins leads to a strong ROI. And as the overview, I want you to know that your profit margins are important to assess, not just from what many of you probably are currently doing, which is you figure out how much labor, cost of goods is going to entail for a project. You typically bump that up by whatever you want your margin to be. For simplicity, we'll say 30% here. And that could be like your base point of where you price a project. And then you may go in a little bit higher to give you some negotiating room. But simply put, your profit margin is the percentage of revenue that remains after you've paid all of your expenses. And there are two main types of profit margins, gross and net. Your gross profit margin considers only the direct cost, while your net profit margins includes all of the cost. Both are essential to understanding for your business's health. So that's why I want to dive into them both. And the next step I want you to know is assessing your profit margins for them both gives you very different numbers that you do need as you are bidding on your contracts in order to ensure that you're always profitable. So the first step is to track all of your revenue associated with each event. So this includes the main income from the contract and any additional revenue streams like sponsorships or ticket sales, things like that. The second thing is to track all the direct cost. So there are expenses that are directly tied to the event, right? Such as your venue rental, your catering, your labor or staffing. Those are crucial to itemize these costs accurately so you can get a clear picture of how much directly reflects the cost of this event for the client only. And I'm not talking have just one blanketed COGS or cost of service line item so we know across your whole business how much direct cost is. That's important, but you need to break this out for every event. We'll get more into that later. The third is to track indirect costs. These are your overhead costs, such as any office rent, utilities, your bookkeeper, any admin staff salaries or wages. I'll provide some methods on how to do this all efficiently as well. And the last thing is once you've tracked your revenue and expenses, it's time to calculate your profit margin. The formula is straightforward, like we talked about it at the beginning. Revenue minus direct costs minus indirect costs divided by the revenue in times 100. That's your profit margin. So that's how you calculate it. But to make this process easier, I recommend using tools and software designed for financial tracking, like your accounting system. They have things in there. So if you use QuickBooks Online, or if you have your Fractional CFO, that's what they're for. And this can automate this work for you so you're not having to do it, and reduces the amount of errors. It saves you time and reduces the errors that you could make in manually doing these calculations. Let's look at some real life examples of different case studies of where accurate profit margin assessment significantly improved business outcomes. So you'll notice this specific business that I am sharing currently on our screen, they saw almost an immediate ROI and increased profitability in less than a year after growing and hiring us as their fractional CFO. 149.15% growth increase in their sales revenue from January to April of 2023 compared to the same period the prior year. A couple factors that contributed to this growth was the institution of us providing them with guidance on how to best approach bidding on their projects and contracts. And so, yes, their cost of goods was substantially increased as well by 122.47%. This was inevitable and comes with the territory of growth, right? What they say is more work when you come take on more projects. Therefore, we guide our clients on the best way to do this and still increase your profit margin, as they did by 26.68%. And you'll also notice that an improved gross profit margin of 199.6% compared to the previous year, that strategy that was implemented to achieve this improvement was mostly price adjustments and lead gen that brought in new contracts and new clients. Overall, positive net income for the period was an incredible 124% increase for this client. The factors contributing to this growth, which has hence provided better financial stability for them and profitability, has given them significant liquid cash. So now they no longer have a cash flow issue. And they were able to reinvest a lot of that money into the business by moving into a high yield account to make their money make them more money. And here's another fractional CFO case study, this time directly from a different client who experienced results from better pricing strategies, improved work-life balance, and having a CFO in their back pocket to make well-informed business decisions with confidence. So as you see from this real client's results, the benefits of accurate profit margin assessment is a game changer for sustainable growth. My approach as a fractional CFO, your on-call financial executive partner without the six-figure salary that you'd have to pay for someone like me, has helped numerous clients transform their operations and increase profitability upwards of at least 3x ROI within the first 3 months. So with these, I want to let you know that you could do this. I just gave you the quick tips. This was only, I wanted to keep this well under 30 minutes because I don't want you to overthink it, right? So those 3 quick tips and we're out. But I want you to understand that it doesn't have to be hard and you don't have to be overwhelmed with, am I going to reap the benefits of all this work I'm putting into this project and not sure if the pricing is right. So I didn't want to waterboard you and give you a whole bunch of information. Plus, don't you hate it when you get a lot of information and you leave places with a bunch of notes? You already didn't want to implement this financial strategy in the first place, but now you have way too much information. I know. You know how I know? Because I'm a self-help addict. So I know how it feels. I should say I'm a recovering self-help addict because I'm working on it. But this is why I literally just gave you a simple step-by-step guide that you could work on immediately. With Commerce with Kellé Fractional CFO Services, you'll no longer have to guesstimate how much you pay yourself, not be able to apply for a loan or grant because you don't know exactly if you'll qualify, or logging into your QuickBooks account and another Excel spreadsheet separately to try to figure out your ROI separately out of your QuickBooks account. You'll no longer have to wing it to guess on a project. You will process those invoices to your clients, payroll, none of that. You don't have to be siloed on your own doing any of these pieces. Stress out because you made so much money this year, you don't even know what your tax bill gonna look like. We got all of that. We handle all of that for you. And I promise you, you will never feel so relieved by it being taken out for your plate. And here are just a few reviews from our clients that took the leap and made the decision to be vulnerable and trust someone to get all in their business, and you can too. I also have this is the review from the client who, here she is, who just voiced her testimony on an info session just like this to talk about fractional CFO services and how it's impact her business. So you don't have to waste any more time trying to figure out these pieces alone, embarrassed that you don't have any clue about how your pricing is. You just base it upon the last event that you may have done similarly to that. You have a person that you can trust, that's non-judgmental, and you can be vulnerable in the space to discuss your business. Here's an overview of what our one-stop shop business financial management is for one monthly flat fee. Just because I know some of you may be asking, do I have to get on a call with her just to find out what they do and how much it may cost? No, you don't have to. That's why we have this here. So you can see exactly what it is we do, how it's so streamlined and easy for you. It's one comprehensive flat fee that doesn't fluctuate monthly. It's flat, it's tied for a year. You're not obligated to pay it for a year. There's a 60-day out clause. So you're not obligated to move forward. And I want you to know, though, that at any point, I am here for you, whether you are a retained client or not. Follow me on all social media platforms at Comments with Kellé. Don't just watch. DM questions. We are in there. I'm just not in there. My team is in my DMs answering your question. I am passionate, and we are passionate about people over profit first. So we will answer your questions. We have experienced people on this team. I'm not the only financial expert. I am blessed to have a team of awesome people that can assist you. And I want you to take advantage of that, whether you're a client or not. Thank you for your time and attention. Remember, assessing your profit margin is key to a sustainable and profitable business. Again, don't forget to follow me on my social media platforms, and I'd love to follow you back to see your journey through your business. And I'm here to help you every step of the way. Let's work together to make your business thrive. Have a phenomenal day. Make it a great one. Till next time, bye now.